I feel like there's something to be said about modern financial practices and recommendations on forms of social media. This does extend beyond YouTube. This does extend to platforms such as Facebook, TikTok, Twitter, etc. As someone that did work finance, it always comes across as strange when you have someone that is not a licensed financial advisor giving financial advice. But Kip, you worked at a financial institution. What do you mean you can't give financial advice? I'm very glad you asked that, actually. Even though I worked at a financial institution and I was arguably very good at what I did, I was not a licensed financial advisor. I did not have any paperwork. I did not have any credentials to legally give financial advice. Take into consideration something like credit, building your credit, understanding your credit score, and figuring what practices to engage in to fix credit and or build credit in a certain way. I absolutely could tell someone that this is how credit works. This is kind of what you're looking for. If you want to see an increase, if you want to see a change, you would theoretically be looking at this. However, especially because credit is ambiguous by nature in a lot of cases, a lot of things could be subjective. In this example where I'm discussing with someone their credit and what they could be doing, imagine if I were to give them advice and I said, you will receive a 30-point increase if you do this specific thing. At the very least, I feel that would be disingenuous of me to guarantee that. And ultimately, at the end of the day, I have a snapshot of their financial situation. I do not have the full picture. So on this limited information, I give this advice and I guarantee them something. And in fact, this does not happen. Maybe their score increases by 2 points. Maybe their score drops by 5 points. Maybe it puts them in a financial hole. At the end of the day, I could potentially be held liable. And this is a situation that's in a vacuum. There are so many things to consider. How many institutions do you bank with? What's your debt to income ratio? Do you have a stable job? Do you not have a stable job? Have you applied for anything recently using your credit score, specifically using a hard pull? Are you looking at financing something? There are so many factors at play there. And even if I had the proper credentials, unless I had all the information that I would need to make a valid, this is what you need to do, I have no business giving that information. Let's take another situation, as I did work around HELOCs, a home equity line of credit. So what a HELOC is, it is a revolving line of credit using the equity that you have accrued in your home as collateral on a line of credit. So say your home is worth $500,000 and you have it paid down to the point where you owe $250,000 on that. Using these two values, you do have $250,000 in equity on your home. Or say your home is worth $1 million and you have it paid down to where you only owe $200,000. You do have $800,000 in equity on your home. And that's where people will consider getting a HELOC. They will use that, say $800,000 in the prior example, and they will use it as collateral on a line of credit. Generally, it is variable rate. Please always check with your financial institution in regards to the specific details of that specific HELOC and loan. And they will now have a revolving line of credit that they may use. Now, there's a cost-benefit analysis that happens with this. As with anything, there's going to be reasons to do something and reasons not to do something. For example, specifically with the kind of HELOCs that I worked with and the kind of HELOCs that are most common, they are variable rates. What variable rate means is exactly what it says, is that your rate can vary, and this is reflective of the Federal Reserve. To clarify, I am being apolitical with this. I am merely speaking from a strictly financial standpoint. When the market is good, when interest rates are low, your HELOC's interest rate will be low, as well as any other variable interest rate product. On the flip side of that, when the market is down, say in a case like 2008, you will see your interest rate skyrocket. And at the end of the day, that is a Federal Reserve thing. If the Federal Reserve continues to raise rates, you will see a continued increase in your variable rate. So taking this into consideration, do you think that isn't necessarily fair or proper of me to give financial advice when I don't know what the outcome is going to be, or knowing this and potentially withholding information? I'd argue, as a former financial professional, no. I'd argue that would be very disingenuous of me to promote something or to say this is what you need when I don't know the full details, or the product might not be the best for them. Understanding what I've been through, let's move on to social media. Over the past couple of years, we've seen no shortage in the amount of financial advice given willy-nilly on social media. Absolutely, I'm sure these individuals and creators will have a license to give financial advice. However, in a lot of cases that I personally have seen, I will not be naming any creators, they don't have the credentials or the paperwork to legally give financial advice. And there is also the gray area of giving financial advice, saying I cannot legally give financial advice, and the duality that comes with that. Do you think that it would be necessarily fair if I said, you need to get a new credit card, you need a new credit card, and you need it at this interest rate, and this will help you? Oh, but this isn't financial advice. I'm not a financial advisor. I legally can't give that. At the end of the day, why say it? There's also an integrity part in all of this. There have been a number of high-profile creators, celebrities, what have you, that have pushed various financial products, namely crypto, NFTs, etc. Now, if you have spent money into crypto, into NFTs, and you feel that is the best financial decision that you could have made, that is ultimately your prerogative. I also do have concerns on what what they're backed by. For instance, in the past, USD, the United States dollar, was backed at a ratio of gold per dollar. I believe that the dollar was taken off of the gold standard at some point, but I believe that starts delving into politics because it was a specific administration that did that, and I'm not here to speak politics. So when I look at crypto, when I look at NFTs, my main concern is, what is this backed by? What secures this asset? But that's just me personally. So you'll get a number of celebrities, you'll get a number of large creators that will say, hey, let's go into this. You can 100x, you can 1000x doing this. I'm doing this. You should hop in on this. There's a lot to unpack with situations like that. If you are ever paid to promote a product, as far as I'm aware, you must disclose that. There's creators that I've watched for years, Peanut Butter Gamer, The Completionist, and when they receive a game from Nintendo, you note that they say product provided by Nintendo. The product was provided by Nintendo, and they are contractually obligated to mention that it was provided by Nintendo. If I was paid to promote something, let's, for example, say I was promoting a barbecue restaurant, and I was going off on how this barbecue restaurant was awesome, you need to go there, and, you have to try this, I do feel that even outside of a legal standpoint, if I was paid to do the advertising, that should be disclosed. So expanding upon these examples, we have large-scale creators, we have celebrities that are being paid, in some cases, to promote products and not necessarily disclosing that they're being paid to promote these products. Inherently, that would be disingenuous to the audience, to their following, but there are also moral and ethical concerns in regards to, are they following all guidelines and regulations? As far as I'm aware, one of the big sticking points in regards to crypto and NFTs and lack of potential regulations on it is because the medium is so new. It's why you'll see a lot of people talking about YouTube and copyright and how a DMCA overhaul might be needed in regards to certain copyright practices. The legislation just hasn't caught up with certain modern financial practices. And thus you get into arguments of whether they count as assets, whether they don't count as assets, and that leads into certain legal areas. Finance is fun. So as somebody that did work finance, as somebody that did take pride in their work, as somebody that read as many policies and procedures as I could and enacted them to a T to the best of my ability, and understood that I had regulations placed upon me, if I were to say certain things, if I were to not do certain things, I would absolutely expect to be punished. There are consequences for breaking protocol and regulations in a field like finance. Although on social media, it doesn't seem like these same protections exist for your average consumer. This isn't meant to be some kind of weird call out. This isn't meant to be some kind of weird gotcha moment. This isn't meant to be a crusade against, individual celebrities, content creators that have promoted crypto, NFTs, or any such alternative assets. As somebody that did work in the financial sector and understood what kind of penalties I'd be looking at if I didn't do things in a proper manner or gave financial advice when I'm not a licensed financial advisor, I want to point out that there's a lot that goes on in regards to financial professionalism, and that you should always do your research. You should absolutely feel empowered to do your research. If something doesn't make sense, you should feel empowered to get a hold of your financial institution and say, look, I'm thinking about this. This is what I need to do. This is what I'm wanting to do. Or I need clarification on this policy and procedure. I need you to help me with this. And those discussions were honestly, personally, my favorite. I could have someone calling in about an overdraft policy. I could have someone asking about building credit. I could have someone asking about what a HELOC is. And we would have a conversation of, this is what you're looking at. This is what this is. This is what this would look like. This specific thing that you're looking at is variable rate. This one that you're looking at is fixed rate. And you get to have a discussion built on that. Another important thing about finance is if something is covered by FDIC or NCUA. The funny little sign when you walk into a bank that says FDIC insured, or a credit union that says NCUA insured. Effectively, at a base level, FDIC is for banks and NCUA is for credit unions. And it ensures that funds up till a certain dollar amount, I believe it's $250,000, will be secured. Now, this could differ between institutions. Please, as always, go and consult your institution if you have any questions, if you have any concerns, if you want it explained. They're more than happy to explain that. All in all, as a former financial professional, I do think that creators and celebrities should be taking this a lot more seriously. The larger you are as a personality, the larger outreach that you have. And to give financial advice without being a financial advisor, I feel is disingenuous at best. And for legal reasons, I am not a financial advisor. I legally cannot give financial advice. What I can absolutely recommend is if you do have any questions in regards to your finance and things that you are potentially looking at investing in, please, I'd recommend go seeking out a licensed financial advisor to help you find the best option for you and your situation. Statements like that need to be more normalized. But what do you think? Do you think that Kip's maybe onto something? Do you think that this is just public information at this point? What are your thoughts? Let me know down below. And as always, please keep it professional in the comment section. I will see you in the next one.